G'day and kia ora everyone. My name is Sanjeev and welcome to the Engineered Investments channel. At the end of this video, you would have gained objective insights into Altium, a software technology company listed on the Australian Stock Exchange. Altium was established in 1985, or 36 years ago, in Hobart, Australia. Originally launched as Protel Technology by former CEO Nick Martin, who developed their first DOS-based PCB design software. Here's a fun fact. According to the website, Altium is now the world #1 PCB design software. A very good achievement indeed. I'll also mention PCB stands for printed circuit board. Today, the company is headquartered out of California, where they continue to develop software that helps in designing electronic products. They've also expanded into cloud-based electronic part search and CAD design. The company's products are utilized by telecommunications, automotive, defense, and consumer electronic industries, with many of the companies within these industries considered blue chip. They employ 800 people in 16 countries across Europe, North America, Eurasia, Asia, and Australia. They currently rank 108 out of the 2,200 plus companies on the ASX. Looking at the front metrics, and just a heads up, the figures below are shown in Australian dollars. Dividends have been paid continuously over the last 5 years, with the 2021 total dividends holding at 40 cents per share. In addition, there's been a steady increase of dividend payouts over the last 5 years. The share price has grown by 338% over the last 5 years. If you had purchased shares in November 2016 for $8.50, as of October 2021, your share price would have increased by this percentage to $37.28. The 2021 revenues decreased from the previous year by $29.2 million to $239.2 million. In saying this, Altium's financial report advised a 6% gain in revenues from the previous year. However, this is not what has been recorded on the Australian books. If anyone has knowledge on why there's a difference between the two, please do comment. I suspect that it's something to do with the different end times of financial years between the US and Australia. Moving on, the core PCB design software remains the most widespread professional design suite used by 30,000 companies worldwide. The annual subscriptions increased by 7% from the previous year. The company's world-first cloud platform has gained strong adoption since launch in May 2020, with 6,000 plus active accounts already, which combines their PCB software design, electronic components, libraries, mechanical design, and data management into a single spot. Altium mentions being the first to provide this end-to-end cloud-based PCB design, source manufacture, and resource capability will simplify the slow and manual design process of today, where strong customer acceptance is expected due to the adoption of the internet. The earnings before interest and tax decreased by $26.2 million to $63.7 million. The profits before tax landed in at $63.2 million, a decrease of $26.2 million from 2020. Looking at the shareholder metrics, the return on equity ratio decreased by 1.5% from the previous year to 13.7%, which is still a good indication healthy profits are being maintained from the significant increase in assets owned from 2020. The debt to equity ratio is miles under the 70% threshold, a very, very good indication that the shareholders' equity is not likely to be impacted if the debt repayments were to drift upwards. The earnings before interest and tax, or EBIT, has decreased to 27%, still indicating profitability has been improved when comparing pre and post-tax profits. The gross margin of 40% is very nice. The business has invested wisely in keeping revenues up whilst keeping development and infrastructure costs in control. Profits after tax, or take-home pay, came in at $142.3 million, a $97 million increase from 2020, though I suspect the spike could be related to a divestment they made during this financial year. So what's the outlook? Well, the company has experienced short-term business impact, which they mentioned was related to the current global market disturbance. However, they anticipate nearly doubling their revenues to $500 million by 2025. They intend on achieving this goal by moving from a software-only company to one with wide range of services available on the new cloud platform, which we discussed earlier, where the cloud platform will provide a new, more stable, predictable, and recurring revenue model, enhancing the way customers transact with the company. In summary, dividends have been paid continuously over the last 5 years, with a steady increase in dividend payments during the same time frame. The front metrics are okay. Whilst there are no real alarm bells, it is still something that needs to be tracked when the market returns to a new stable. The shareholder metrics are suggesting excellent profits are being extracted using the shareholders' equity, in addition to ensuring lean development and infrastructure practices. These characteristics typically signal a high potential for stock investment. This brings us to the end of the video. Please do like and subscribe. Thank you for watching. See you next time. Ka kite ano.